but the more complex it becomes, the higher it is, or the less the competition is out there buying it. So that said, our going in cap rates right now anywhere from 9 to 13% and sometimes higher, which is really just astounding to think about that in the commercial real estate space, that we can acquire a cash flowing asset at a 13 cap. That's our going in cap rate.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
How to Scale Commercial Real Estate listeners, today you get me. I don't know what episode number this will be, but I'm sure we're pushing 700 or more. And up to this point, I've never done a solo episode. So here you get me today, where I'm going to tell you a little bit about what we are investing in. This was a comment that I've received from someone recently that said, hey, one, I've never heard from you on the podcast. And then secondly, I really don't know what it is you're investing in. I said, man, I feel like I communicate that pretty well. Obviously not. So here we go. Today's episode, we are going to talk about where me, I guess. It's just me standing here. I am going to talk about what I find, or where I'm finding opportunity in the commercial real estate space right now. And that is in RV resorts. For those of you that don't know anything about RV resorts, I'm going to break down the difference between an RV resort and an RV park to start. An RV park is going to be something like Kansas, like Interstate 70 in Kansas. It's going to be a one-night stop. You're going to pull in. You're going to stay there for the night as you finish carry on your drive across the country. You're looking for a place to plug in your RV, a place to dump your sewer, a place to get water, and just spend the night, and then you're going to keep moving. I have no interest in buying RV parks. Those are fuel price sensitive. They are not places that retain customers. They are just a layover. I have stayed at plenty of RV parks in my time. And it's just not something that we have an interest in acquiring. An RV resort, however, is the destination. RV resorts are a place where people want to go and they want to stay for 3 to 4 days at a time. There's loads of amenities on site. Think about things like pickleball, tennis courts, game rooms, fishing, dog parks, swimming pool, water features, you name it. There's an endless array of things that can be considered amenities at an RV resort. We want people a camp store where you can get firewood, rent golf carts, get your propane, you name it. We want to have those at our RV resorts. And it's something where people go with their family and they'll stay for 2, 3, sometimes 4 days at a time, depending on what the suite of amenities may or may not be. That's what I want to acquire, and that's also where we're finding just almost completely unmet demand. Let's get into who owns RV resorts right now. It's largely a mom and pop owned operation. It's fragmented. Usually it's a single asset. It's a couple that owns it. Again, I said that that's the only asset that they own. And the why we're finding opportunity on that front is because they don't generally possess the sophistication that maybe you would find across a institutional owner or a more sophisticated owner such as ourselves that own multiple resorts across the country. It's the only thing they own. So they haven't taken the time to figure out the operational improvement opportunities, especially because it's not scalable for them because it's their only asset they own. So they go, it's not going to make that big a difference here. Well, it makes a huge difference for us if we figure out utility bill back programs. Right. So here's some of the things that we see for the operational improvement side of things in these mom and pop owned assets. One, many of them don't have a website. That's right. You just heard that. We have a property under contract right now with no website. It has no online booking. It has enormous land opportunities attached to it where we can expand the park. They may be 100% full, but mom and pop don't want to put the money into expanding the park because it's a big capital investment. Understandably so. It's a lot of money. It costs money to expand a park. So we've got opportunities for expansion. We've got opportunities for storage on a lot of these properties. There's, again, I talked about utility bill back. It's something we're working on right now where you can bill back your utilities. Let's assume that somebody pulls in a big giant RV, a big 40 something foot Class A diesel pusher with 3 air conditioners attached to it, and they plug into your 50 amp service for the weekend. and they run those air conditioners wide open all weekend long. Well, we as the owners go, oh my gosh, that's really expensive because we're paying utilities. Well, we're working on a program right now where we get to bill those utilities back. Again, that's time and infrastructure, or time and effort, put not into running the park, but into finding ways to creatively improve the bottom line on these assets that mom and pop just don't have the time to do because they're out fixing sewer lines, they're fixing water lines, they've got, say, frozen pedestals or whatever else is going on at the park. They're putting out fires, not thinking about ways to strategically improve the value of their park. We know what that brings when we improve the bottom line and what it brings to a future sale. So that said, there's just huge opportunities for operational improvement. I know I talked a little bit there about a website and online booking. Dynamic pricing is something I haven't talked about really at length with you yet. Dynamic pricing is something where we conservatively estimate that we can change the net operating income by 10% just by adding dynamic pricing. There was a park we bought earlier this year, had the same price on April 4th as it did on July 4th. July 4th is the busiest weekend of the year. Why do mom and pop keep the prices the same throughout the year? Because they can remember it. Think about that for a second. Oh, it's $49 a night to stay. Well, it should be $49 a night maybe to stay on on April 4th, but on July 4th, when you have a waiting list and your park, your resort is completely full, that probably needs to be a lot higher than that. So implementing software solutions that dynamically price the sites on a daily basis versus, well, it's what it costs this year to stay here no matter what day it is. That drives an enormous difference in revenue there at the end of the year. So we see huge opportunity for operational improvement. The next thing that we're seeing right now, and you probably heard a lot of what I've said here when I tell you this, in the sense that these are operationally complex assets. The biggest detractor in this whole asset class is that it is operationally complex. We just bought a resort that had the RV park. I'm going to use the word park component to it. Had 100 sites. There is a marina on site with a couple hundred boat slips. There is a guide service. There's bait sales. There's a camp store. There's a restaurant. There's a 40-room motel. And on and on and on it goes. You go, wow, that's a lot of moving pieces. And it certainly is. And that's something that's part of the business that is both the blessing and the curse, is that it is operationally complex. But the more complex it becomes, the higher it is, or the less the competition is out there buying it. So that said, our going in cap rates right now, anywhere from 9 to 13%, and sometimes higher, which is really just astounding to think about that in the commercial real estate space, that we can acquire a cash flowing asset at a 13 cap. That's our going in cap rate. That's not even our stabilized cap rate. That's awesome. I mean, think about that. And then the number of levers that we have to pull inside of these assets to drive revenue in a meaningful way. I know I mentioned a lot of them already, but I mean, just simple firewood delivery, golf cart rentals. I mean, you might think, okay, well, that's a pain in the neck. Somebody's got to manage that and run that and take care of the golf carts. Yes, that's what good systems and good people are for. But inside of that, we can really change the trajectory of a property with 3, 4, 5 of those different items. And suddenly this property became way more valuable, or the business became more valuable, just based upon the operational improvements we were able to pull off. So there you go. Going in cap rate, 9 to 12%. Let's talk about the demand side of things. So that gives you a little bit of color. So we can buy right. This is an asset class that is largely underinvested in. It is undervalued, underinvested in, loads of room for operational improvement. It's a fragmented industry, mostly mom and pop owned. All of those things are great, but the real question is this an asset class that has legs to it? If you're listening to this, you're probably going, oh, wait, yeah, this is great. But I mean, isn't all of this largely fueled by the pandemic? Isn't this largely fueled by the fact that, a couple of years ago, everybody just wanted to get outside and be left alone? And isn't that going to wane? This statistic will probably blow your mind a little bit. The largest group of RV owners in the United States right now is millennials with children. If you'd asked me that question 3 years ago, 4 years ago, I'd have said, the largest group of RV owners would probably be somebody north of 60 on a national park tour that's retired, going around to see the country and, just having a good time. Well, that is that shift has been pretty dramatic, and it's not really going anywhere. The people that own RVs, there was KOA put out a survey here recently, and they came back and said that 60% of the people that own RVs are looking for a bigger and newer RV. Wow. Okay, that tells you something about what people think about the RV industry. Now, of course, I mentioned, or maybe I did, or maybe I didn't, but mention the fuel prices being one of the detractors to the RV space, and that's also one of the reasons that we love the RV resort idea. We're trying to buy assets that are within a couple hours of a major city. It's something where it's not going to break the family bank to drive the RV to the destination, keep it parked there for the weekend. There is a long-term component to the RV resort space that many people don't think about. The long-term component is that 50 to 70% of the sites at most RV resorts are leased on a long-term basis. Think about that. It is a better tenant. It is someone and they don't live there all the time. That's the other thing, is that it's just a space. This is their vacation home on wheels. So they don't live there. They pay their site rate on an annual basis, and so we get a better quality of tenant that pays on time, that isn't there very often. Great, that's absolutely ideal for us in this space. Now we're going to try to trim that back, because there's a fine line between how many long-term tenants and how many short-term spaces to leave available, and that's kind of a bit of guessing here, as much as it is anything, and just looking at historical trends and figuring out where the right sweet spot is for that. But that said, on the demand side, the people that are parking their RVs at these places and say, all right, I want to have my spot at XYZ resort because I'm going to take the family down there. We're going to hang out every weekend, and I'm going to go fishing, and the kids are going to go, do whatever they do, play and swim in the pool, and it's going to be a great time. That demand just isn't going to go anywhere. Once you kind of get into that culture, if you will, we don't see that decreasing in any meaningful way in the near future. So that said, there are a lot of compelling reasons as to why we are buying RV resorts right now. Financing is good for it. The industry is fragmented. There's loads of room for operational improvement. We can buy the assets right, and we're just really excited about where this is taking us. We've acquired 1, 2, going on our 3rd acquisition this year in the RV resort space, and really ramping that up here moving forward. But that's just kind of a cool asset class that nobody's talking a lot about, and where we're just seeing blue ocean. So that's it. Thanks for listening in today. Certainly appreciate you tuning in. That gives you an idea of what it is we're buying and why we're buying it. If you need any insights on that, or want to talk further about the opportunities that we see and where we're acquiring assets, feel free to reach out. But thank you again for tuning in here today.